Most people believe that in order for you to start investing in stocks, you need an amount more than 5,000 US dollars. However, I am here today to prove to you that you can start investing from even $100 a month. To stay up to date with all our recent videos and updates, hit the subscribe button and the alert icon and join our newly launched Student Investor members website using the links below. The first question would be, why do people think that you need a big capital to start investing in stocks? The reason is that most people focus on how much money they will make in the short term rather than thinking about the long term. So if you're a student and you don't have any savings, or you have a small portion, let's say you have $1,000 in the bank, you're thinking that there's no point of start investing in stocks, because if, for example, you will make 100% of return, that would be only $1,000. So that's not a lot for any person. However, if you had, for instance, 10,000 US dollars and then you had 100% return, that would be another 10,000 in the bank. So your capital now would be 20,000 US dollars. However, if we change the approach and we focus more on the percentage of return instead of the amount that we earn, then we don't need that much capital. So if, for example, you're a student and you work part-time, and let's say you manage to save 200 to 500 euros a month, or even as low as $100 a month, then every month you would set a target of, let's say, $100 a month that would go into your portfolio. Therefore, that portfolio will now be like a savings account. Instead of just putting the $100 in a bank, where you will not receive any interest on it, or even if you do, it will just be a small percentage, let's say 1 to 3%, which is not a lot for if you want to grow your capital. Let's say you have Tencent Music, for example, that we talked about in our last video. Tencent Music trades at around $17. So for example, with $100, you could buy 5 shares of Tencent Music for the first month. Then the following month, you might want to increase your position or find a new stock to invest in. For example, if you want to find stocks that are more safe or larger cap stocks, you might want to invest in a stock like Square, for example, or a stock like AMD or Micron, or let's say Ollie's Bargain Outlet or Kirkland Gold. There are many options to choose from, and therefore you can diversify your portfolio even if you're starting as low as $100 a month. Now, let us do a small calculation to prove to you that you can actually grow your capital even if you start from $100 a month. If you have invested $100 each month, then for the whole calendar year, you would have invested $1,200. Therefore, if your positions have increased, for example, 50% on average over that year, then that 1,200 would have become 1,800 US dollars. And then if you would continue that for, let's say, another 3 years, if your study is 4 years long, then you would reach a capital of 1,800 times 4, which will be 7,200 US dollars. As you can see, you have a minimum growth towards 7,200 US dollars in a period of 4 years. However, there's also a downside. Let us say that you have invested for 4 years an amount of 4,800 US dollars, and then many of your positions did not go well and you lost, let's say, 25% or even 50% of that capital. Then you would have had half of it, which is 2,400. However, you still hold shares of companies. If your choices are based on financial data and also future earnings estimates, then you might want to consider holding those positions, and hopefully the stocks will rebound and regain their previous prices or even grow in the following 3 to 5 years. In the perfect scenario, however, let us say that your positions that you took from the first year and the second year have kept growing more than 50 to 100% each year. Therefore, those positions would have quadrupled or tripled or doubled until the fourth year. Therefore, if you take the first investment of $1,200 and let's say it quadrupled over 4 years, you would have had $4,800 only from the first year. And then let's say the one that you invested in the second year tripled, you have another 3,600. Therefore, we have an amount of 8,400. And then the one from the third year to 2,400. And then from the next year, we have 1,800. So if you see, you already have grown your portfolio into more than $10,000 within 4 years if you have made the right choices based on what we explained in our previous videos and also in our student investor online course and guidebook, which you can access using the links below. Therefore, let's talk about the key takeaways from this video. First of all, you should not keep all your savings in a bank account as there is no return on investment. To be honest, that amount will just keep decreasing as you will be spending it on things like traveling or buying new clothes or a phone or anything else you can imagine. Whereas even if you have let's say a 1% interest rate, you would just receive a very small percentage of the amount that you have in the account, which will not really grow your capital. On the other hand, you should set a monthly target of an amount of your savings that you will be investing in a stock portfolio. Therefore, if you set a target from as little as $100 a month, you can grow it into tens of thousands of dollars within a period of 4 years, which is a normal bachelor's degree. And then you can continue investing in the stock market or pursue a business plan of yours or a passion that you may have after your studies. Thank you very much for your attention and stay up to date for our upcoming video on Monday.